Welcome back to the Deep Dive. Today we are plunging into a really fascinating intersection. We're talking AI and decentralized crypto
It's
management.
two huge trends.
Yeah,
Yeah.
exactly. And our mission today isn't just about the hype. We want to do a proper, detailed forensic examination of BlockMind AI. We're looking purely at its potential, what traction they've actually managed to get, which is tough in this market, and, their pretty ambitious roadmap for the next couple of years.
Right.
We're really here to figure out clearly what is this project trying to do, and maybe more importantly, do they actually have the foundation to pull it off?
Yeah, that's the right way to look at it. BlockMind is, I think, a great case study if you want to see where AI-driven crypto investing might be headed.
So what is it, fundamentally?
At its core, it's an AI-powered platform for managing cryptocurrency portfolios. But the key thing, the distinction they make, is they're not just a passive tracker. They're aiming to provide hyper-personalized guidance and eventually full end-to-end automation for some pretty complex investment strategies.
Okay, and they have a core mission statement driving this, right?
Yeah.
It sounds simple, but I guess it implies a lot underneath.
It really does. It's deceptively simple. The mission is stated as deliver AI-powered, actionable crypto insights to every investor, personalized at scale.
Personalized at scale. That's the tricky part.
Exactly. To really get the ambition, you have to see they're tackling two related problems. First, just the sheer data overload for everyday retail users, right? And second, the lack of truly accessible institutional-grade tools within DeFi.
Right. And the strategy to get there is interesting because they're not just picking one lane. They're going after two very different markets at the same time, using one platform underneath it all.
It's a dual approach, yeah. Requires a lot of precision. That's really the critical piece of their market strategy.
So who are these two markets?
Okay, so on one side, they're really focused on the mainstream investor. The sources call them normies, people who are currently, frankly, underserved by the super complex, often intimidating crypto tools out there now.
Yeah, the ones who just need the bottom line.
Exactly. They need simple, direct, actionable advice, delivered super easily, low friction.
Like the TLDR for your portfolio, basically. Not a message charts you need a finance degree to read. Just, is this going up or down? Should I worry about risk?
Precisely. But then there's the other side of the strategy, which is maybe more complex, more long-term focused. That's building enterprise-grade intelligence.
Okay, so for who?
This is the really sophisticated, granular intelligence layer aimed at institutional players, big funds, fintech platforms, pro traders, the Dajans, as the source material puts it, who want proprietary real-time data and analytics.
So this dual focus, it suggests they see their AI and all the data it gathers not just as like a consumer app feature, but as actual infrastructure they can sell to the wider crypto world.
That's exactly it. Critical, sellable infrastructure.
Okay, let's unpack this. A platform trying to make crypto simple for beginners, like getting personalized advice in an email, but also building the deep data infrastructure for, the biggest funds out there. That sounds like a monumental task. It really relies heavily on the team, right? There's specific skills and credibility.
It absolutely does. And the team's background, which is detailed in the source material we looked at, kind of gives a unique answer to why they might be positioned to actually pull this off in this specific niche.
All right, let's get into that leadership then. The project lead is Oscar Solberg, a Norwegian serial entrepreneur. What jumped out at me and what we flagged was his academic background, dual degrees in mathematics and philosophy, plus over 10 years in crypto.
Yeah, that math and philosophy combo is, I think, quite telling, especially for a platform that's leaning so heavily on automated decision-making.
How so?
Well, the mathematics gives you the rigorous analytical power, right, for modeling risks, building the AI algorithms. But the philosophy, that suggests a more nuanced understanding of market behavior, human decision-making, maybe even game theory, the irrationality that often drives these speculative markets.
Oh, okay, so not just someone who can code well, but someone who maybe gets why retail investors panic sell or chase the hype.
Potentially, yeah. And you add to that the 10-plus years of actual crypto experience plus 6 years in financial publishing. That publishing part is crucial for the retail side.
Right, that's where the experience meets the target audience.
Exactly. This isn't just theory. He's had direct frontline experience with literally hundreds of thousands of crypto clients. So he presumably has deep empirical insights into where retail investors get stuck, what information they actually need, and importantly, how they consume advice. He knows the emotional buttons.
And the co-founder, Lars Sackel, focusing on strategic business development.
Hmm.
He has a similar academic profile, right? Honors in philosophy, too.
Yeah, from the University of Oslo. It sort of confirms that the project's strategic thinking is probably rooted in both quantitative analysis and behavioral science.
Okay, and that financial publishing background you mentioned, that seems like their biggest credibility check for the initial retail push.
It really is. They built a publishing company before this that sends, get this, over 1 million emails to crypto investors every quarter.
Wow.
Yeah, that shows massive technical chops in scaling distribution, obviously. But maybe more importantly, it shows they know how to create content that people actually pay attention to and act on. They've essentially been running a huge study on retail investor behavior for years, tweaking the format, the delivery of insights people can actually use.
That deep understanding of retail, that must be why their early performance metrics look so strong. This is where we need to get critical, though. Let's talk about the proof of concept phase, the beta they ran in Q2 and Q3 of 2025. What did that data actually show about product market fit?
The beta metrics are genuinely quite exceptional. They go beyond just vanity numbers. They had over 150 active beta testers. And those testers were tracking $13.3 million in total value across their portfolios.
13 million a beta. That's significant.
It is. It shows a decent amount of trust in a product that wasn't even fully launched yet. Speaks volumes, I think.
Okay, solid early numbers. But the engagement rates, those are the figures that really leap out from the sources. We need to really dissect those.
Absolutely. So start with the baseline operationally. A 97% email delivery rate. Now, that sounds a bit administrative, maybe?
But it's important for reliability. Yeah.
Crucial. For any high-volume, personalized platform, that stability is table stakes. But the defining metric, the one that just blew expectations out of the water, was the recorded 137% open rate on their weekly portfolio reports.
137%. Okay, let's pause there. As we noted, the industry average for finance or crypto newsletters is usually somewhere between, 20 to 50%?
Lucky, lucky, yeah.
So the immediate question is this 137% real? Or is it just because it was a small, super enthusiastic beta group? Is it sustainable?
That's a fair challenge. And it's necessary. Usually, yeah, an open rate over 100% means people are opening the email multiple times, maybe checking on their phone, then looking again on their desktop later, maybe forwarding it.
Right.
But even if you account for that, the numbers still suggest the content isn't just being seen as, interesting. It's seen as essential to their weekly financial check-in. People are actively seeking it out, consuming it, maybe even rereading it.
So what does that tell us about the gaps in the current market? It points to huge unmet demand, doesn't it?
It really highlights a weakness in existing data providers, I think. Most crypto tools just give you data dumps. They require you, the investor, to do all the analysis. BlockMind seems to be flipping that. It delivers the analysis, the conclusions, tailored to you.
And that 137% rate suggests investors are desperate to just outsource that complex, time-consuming part, especially if the insights feel personalized to their actual holdings.
Exactly. What's fascinating here is that level of engagement really validates the founders' hypothesis from their publishing days, right? They figured the barrier wasn't getting data, it was getting personalized, trustworthy, easy to digest analysis.
You don't get that kind of demand from just basic portfolio tracking.
No way. That's definitive product market fit, plain and simple. It validates their whole approach of using AI for personalized, actionable insights.
Okay, so if the engagement is that high, let's move into the current functionality. What exactly is in those weekly reports that's driving this kind of, almost addictive behavior?
Yeah, the secret sauce seems to be the comprehensive, synthesized nature of the AI analysis in those weekly portfolio reports. It's way beyond just a list of price changes. It's like having an automated financial analyst just for your portfolio.
Okay, break down this intelligence layer for us. What's in the report?
So it starts with immediate context. They give you TLDR rankings for the coins in your portfolio relative to all the other coins they track.
So you instantly know if your stuff is doing better or worse than the market overall.
Right, a quick benchmark of relative strength. Then it breaks down the critical data points. Price trends, weekly performance, volume changes, shifts in market dominance.
Okay, the usual quantitative stuff. But you mentioned social metrics, too. That seems like where the AI adds value that a normal screener maybe can't.
Absolutely. And they incorporate social metrics, which, as you know, are super important in the altcoin space especially. This includes sentiment analysis. Are people talking positively or negatively online? activity levels, social dominance, like how much of the total crypto chat is focused on this specific asset right now.
Yeah, those can be really good leading indicators, often ahead of price moves.
Totally. If you're just staring at a price chart, you miss that context of community buzz or FUD. A coin might look flat, but if social dominance is suddenly spiking, the AI should catch that instantly.
Makes sense.
So it combines all that price, volume, social with technical momentum scores. But the real proprietary bit seems to be BlockMind's own analysis of each coin. That's the AI synthesizing all these inputs into unique, actionable insights that tell you what to do next. It doesn't just give you data, it tells you why the data matters for you.
Okay, so beyond the weekly reports, they also focus heavily on risk and auditing. That feels like what elevates it from just being a smart data display to potentially a real management tool, even for retail.
Yeah, that's where the portfolio audits feature comes in. These are meant to be comprehensive assessments covering performance and, crucially, risk metrics that most retail folks just don't have the tools or maybe the knowledge to calculate themselves. This is where that math background of the founders probably shines.
What kind of sophisticated metrics are we talking about? Let's maybe explain the significance for listeners.
They specifically mentioned two key examples: Sharpe ratio analysis and correlation analysis.
Okay, Sharpe ratio.
Yeah, the Sharpe ratio is notoriously tricky for individuals to calculate properly. It basically measures your return relative to the risk you took to get it, compared against a risk-free benchmark. It answers the question, am I actually getting paid enough for the amount of risk I'm taking on with this asset or portfolio? BlockMind automates that comparison.
Which is super valuable.
Yeah.
And correlation analysis, that's key for diversification, right?
Exactly. Correlation shows how your different assets move in relation to each other. If everything you hold goes up and down together, well, your diversification isn't really doing much. By automating this, BlockMind can help users spot assets that are truly non-correlated or even negatively correlated. That's a hallmark of institutional-level risk management.
So it's bringing institutional techniques down to the retail level, automatic.
That's the goal, yeah, delivered automatically.
And there's one more feature that seems to tie that personalized at scale idea together, reinforcing the low-friction approach. The conversational element, using email.
Yes, the email-based interaction. This lets users communicate with the BlockMind AI using just natural language, like sending an email. And here's the critical part for personalization and security. The AI apparently retains portfolio context,
Meaning?
meaning you can ask a question in plain English about a coin you hold, like, what's the outlook for XYZ coin this week? And the AI knows your specific exposure to it, maybe your history with it, your risk settings, before it generates the response.
Okay, but that brings up a challenge, doesn't it? How do they balance the easy convenience of email with the security you absolutely need for financial data, and especially if they move into trading?
That's a key point. The low friction is probably essential for driving that crazy 137% open rate initially, right?
Yeah.
For just getting insights, email is great. But once you move to the next phase, actual trade execution via email, which is on their roadmap, the system must have robust security layers. Presumably, that would involve linking authenticated email requests to pre-approved, securely connected wallets or exchange accounts.
So the convenience is for the inquiry, but bank-grade security kicks in at the point of execution.
It has to, yeah. That seamless personalization and easy access via email seems like the foundation for everything else they want to build.
Right. So now that we've got the foundation and the currently validated features, let's dive into the really ambitious stuff.
Yeah.
The future roadmap. This looks like where BlockMind potentially shifts from just being a useful tool to becoming actual market infrastructure.
Yeah, the roadmap is incredibly detailed. It lays out growth in very specific phases, showing a clear strategic vision for scaling both the utility of the platform and its user base.
Let's start with Q3 2025. According to the sources, this is stuff that's either done or happening right now.
Right. Q3 2025 was about getting the foundation solid and introducing the token. They successfully launched a BMA-AND, which is their utility and access token that enables key functions like the buybacks we'll discuss later and token gating premium features.
And this marked the end of the beta.
Yeah, beta concluded, they opened access to everyone and launched the BlockMind Insights platform.
And we have some early volume numbers from that launch, right? Moving from the controlled beta to the open market.
We do. In the first month after the token launch in September 2025, they apparently hit $145,000 in volume. Now look, that's still small in the grand scheme of crypto.
Sure, but it's a start.
It's significant initial traction, yeah. It shows there was immediate market demand when they flipped from a free beta to a monetized token-gated service.
Okay, so moving into Q4 2025, the focus shifts pretty quickly to more advanced trading and social features. Looks like these are designed to create network effects and cut down friction even more.
Exactly. This phase is about maximizing convenience and starting to monetize the AI's insights more directly. First up is the launch of email trading.
Trading directly via email.
Exactly what it sounds like. Letting users execute trades, the idea is seamlessly, ultra low friction just by replying to an email.
Let's pause on that email trading again. We touched on the security challenge, but the convenience factor is huge. How important is that for bringing in more casual crypto users?
Oh, it's potentially massive. For a lot of people, logging into an exchange, finding the right pair, transferring funds, setting up an order, it's a hassle. It can be intimidating, easy to make mistakes.
Yeah.
If you can reduce that whole process to just replying to a verified email, maybe confirming something, it makes active crypto trading almost as simple as like replying to a customer service ticket. That could massively broaden the potential user base.
Okay, and the second big feature planned for Q4 aims at the social angle, trying to create some self-sustaining growth.
That's the copy trading launch. This lets users subscribe to the strategies of top-performing, verified portfolios on the platform, and the trades can be automatically executed in the subscriber's own account.
Ah, the classic copy trading model.
Right. It does two key things. One, it lets successful traders or analysts monetize their skills, kind of turning them into influencers within the platform. Two, it creates potentially powerful network effects. The better the top performers do, the more subscribers they attract, which makes the whole ecosystem more valuable and draws in more users.
And they're also planning to expand the Insights platform to show users how they rank against others.
Yeah, adding peer comparison, that taps into that social and competitive drive, which usually boosts engagement.
Okay, now we get into 2026, and the roadmap here gets really expansive. We're talking enterprise integration, totally new product types. This feels like the pivot point, moving from just a consumer app to becoming real financial infrastructure. Starts with the SDK deployment.
Exactly. The 2026 plan is about cementing their position as essential infrastructure. The SDK deployment releasing a software development kit that's aimed squarely at third-party developers, other fintech companies, institutional clients.
So other people can build on top of BlockMind's tech.
Precisely. By releasing the SDK, BlockMind positions itself as a crucial data layer. Other platforms could potentially license and integrate BlockMind's proprietary AI intelligence and its aggregated user data directly into their own services.
Okay, so that's the B2B revenue pivot. What are the hurdles there? Building a good SDK isn't trivial. And how fast could that generate real revenue? Do they need the retail side to be huge first, or can they attract B2B clients sooner?
Good questions. The challenges are probably twofold. Standardizing the data effectively and proving that their intelligence is genuinely superior to alternatives. The SDK needs top-notch documentation and data quality to be easily integrated. As for revenue timing, the sources seem to suggest that the strong retail engagement, that 137% open rate, acts as the vital proof of concept.
Ah, so institutions might license the data because it's proven to work with retail users.
Exactly, because it demonstrably drives engagement and retention. So assuming the SDK is stable, we could see BBB revenue streams, likely recurring license fees, start to solidify relatively quickly. That would provide a potentially stable, high-margin revenue base that's less dependent on volatile retail trading volumes.
Okay, let's talk about the BlockMind app. Launch the mobile app plan for 2026. This sounds like it's where some of the most innovative features land, especially around automation, pushing beyond just executing trades into like automated wealth management.
Yeah, the mobile app seems designed to make the AI truly hands-off for the user if they want it to be. We're talking end-to-end automation. For instance, users could potentially set accumulation and profit-taking ranges, not just simple buy or sell orders.
Like buy ETH whenever it's between $2,000 and $2,500, using 5% of my available capital.
Something like that, yeah. Smart automation. But what's potentially even more sophisticated is the planned indicator-based automation, letting the system react automatically to broader crypto market cycles.
How does that work? What kind of indicators?
It moves beyond just tracking the price of individual coins. The plan includes using indices like the altcoin season index, Bitcoin dominance, and even specialized third-party data. They mention cookie.fun mindshare stats.
Okay, let's clarify those for listeners. Why track those specifically for automation?
Right. So, the altcoin season index helps gauge whether market sentiment is broadly favoring Bitcoin or shifting towards smaller altcoins. Integrating that allows automation to potentially trigger portfolio rebalancing based on the overall state of the market cycle, not just one coin's price.
And Bitcoin dominance is similar, tracking Bitcoin's share of the total market cap.
Exactly. And Cookie.fun mindshare stats, based on the sources, sounds like proprietary data tracking indicators of speculative hype or attention, often linked to retail euphoria or fear. You could potentially use that as a contrarian signal in an automated strategy.
So the automation could become responsive to macro cycles and market psychology. That's way beyond simple technical indicator trading.
That seems to be the ambition, yeah, far more advanced.
And then they're planning a dramatic expansion beyond just crypto assets through DeFi integration. This adds another layer of complexity and probably regulatory risk too.
Yes, through what they call the Avantis integration. BlockMind plans to enable leveraged trading in assets that are traditionally not crypto. Major forex pairs USD-EU is mentioned, precious metals like gold and silver, even commodities like oil.
Wow. How are they doing that decentrally? And why Avantis specifically? This sounds like bridging TradFi and DeFi, which definitely carries regulatory weight.
They seem to be leveraging the structure of certain decentralized platforms, like Avantis, which create synthetic assets. These are basically tokens whose value is designed to mirror the price of real-world assets like gold or oil.
Ah, so you're trading a token that tracks gold, not actual gold.
Correct. This allows users to get leveraged exposure to these traditional markets, but without ever leaving the DeFi ecosystem. It significantly broadens BlockMind's potential market. It could transform it from just a crypto tool into a more comprehensive digital asset management system, all built on decentralized rails. That potentially positions them ahead of some centralized competitors.
Okay, they also have a unique structure plan called Pool, spark these managed pools. How is that decentralized investment pool model supposed to work?
PoolSpark basically allows users to create their own managed investment pools. Think of it like a sort of decentralized mini hedge fund structure. BlockMind's AI would autonomously manage the funds within these pools, but based on predefined strategies set by the pool creator.
And performance is transparent on-chain, presumably.
That's the idea, yeah. Verifiable performance.
And there's a profit-sharing model baked in, designed to ensure the managers are good.
Precisely. The pool creators apparently receive profits only above a certain predetermined benchmark. So if the pool does exceptionally well, the creator gets rewarded significantly, incentivizing them to generate real alpha. The rest of the returns go to the pool investors.
So it decentralizes the fund management role and aligns incentives towards outperformance.
Right. It ties the creator's reward directly to exceeding transparent benchmarks, encouraging high-quality strategies.
And one last feature from the roadmap, which speaks directly to BMAND holders and long-term stability, the profit protection pool.
Yes, this is a really interesting tokenomic mechanism. It's designed to build confidence and potentially manage volatility in the BMIND token itself.
Oh.
It's a dedicated fund, and its purpose is to provide downside protection for BMIND holders. The mechanism is supposed to be predetermined and transparent. For example, the source mentions the fund might deploy, say, 5% of its capital to strategically support the price if BMIND drops 10% within 24 hours.
So active market intervention by the protocol itself.
Essentially, yes, an automated stabilizing mechanism designed to cushion the token's price during sharp market downturns or panic selling, trying to provide a bit of a floor.
Okay, here's where it gets really interesting. How does this whole ambitious growth engine actually work financially? Without a sustainable model to fund that huge roadmap, all this potential is just, well, vaporware. The revenue model and the tokenomics seem incredibly tightly linked to create a sort of perpetual flywheel.
That really seems to be the core of the design. The whole economic model is architected so that platform usage directly translates into demand for and structural support of the BMIND token. They've set up multiple distinct revenue streams, and critically, they all seem to funnel value back into the token somehow.
Yeah, let's break those down. Start with the most direct one, transaction fees.
Okay. Every single trade executed through the platform, whether it's via email trading, copy trading, or the automated strategies, carries a 0.5% fee. But here's the key mechanism, the part we really need to dissect, how that fee is split.
Right.
50% goes to operations, funding the team, development, servers, etc., standard stuff. But the other 50% is perpetually allocated to buying back BIMIND tokens on the open market.
Okay, let's dig into that 50% buyback. How does that compare to, say, just burning tokens or putting fees into a treasury?
It creates a fundamentally different dynamic, I think. A token burn is deflationary, sure, but it only really happens after revenue comes in and tokens are taken out of circulation. A treasury might just hold stablecoins or other assets, which doesn't directly support the token price itself.
But this buyback,
This mechanism creates perpetual buy pressure. It means every single trade, whether it's tiny or huge, forces the platform itself to become a guaranteed buyer of its own token, BAYMD, on the open market.
so it's not just supportive after the fact, it's a structural demand loop built into the core activity of the platform.
Exactly. As trading volume scales, which is the whole point of the 2026 roadmap with automation and Avantis, the buy pressure from the platform itself should increase proportionally.
So more trading volume means the platform is constantly acting as a major buyer for its own token. Supports the price floor, creates deflationary pressure. Interesting.
Very. Then you layer on the premium services. Users have to pay in BMIND for the advanced stuff. The premier reports, extra audits, and crucially, those copy trading subscriptions.
So BMIND becomes the required currency for the best features. Utility demand.
Right. And they also incentivize the ecosystem further by splitting those copy trading subscription fees 50-50 with the portfolio creators whose strategies are being copied. And that payout is also in BMIND.
Okay, reinforcing the token's role. But what about the B2B licensing? Does that also feed the flywheel, even if clients pay in dollars or ETH?
It does. The B2B data layer licensing, selling their AI intelligence via the SDK to institutions that will likely have tiered pricing, probably paid in stablecoins like USDC or maybe ETH. That provides stable operational funding. But again, they apply the tokenomics lever. 50% of that B2B revenue, regardless of the currency it comes in, is also used for open market buybacks of BMIND.
Wow, okay, so that's a robust mechanism. Whether revenue comes from retail trading fees, high-value B2B data deals, or eventually app subscriptions, a huge chunk, 50% in these key cases, is systematically used to increase demand for BMIND on the market.
Correct. And then finally, yes, they expect recurring fees from app subscriptions for the automation tools and premium features on the mobile app. And to really kickstart all this volume, their strategic choice to build on Coinbase's Layer 2 is explicitly designed to tap into the Coinbase ecosystem and drive much higher transaction volumes, which juices all these fee streams.
This whole buyback structure seems deliberately designed to perfectly align the incentives of BMIND holders with the platform's own growth goals.
It looks like a very deliberate architectural choice, yeah. Create value for holders through both mandated utility and this perpetual scarcity pressure driven by buybacks.
Okay, shifting gears slightly to strategic positioning. We've touched on this, but let's be explicit. Why does BlockMind think it can stand out? It's a crowded field with existing portfolio trackers and analytics tools.
They stand out, fundamentally, because they're aggressively targeting what they see as an underserved gap in the market. That gap is the vast majority of retail crypto investors who just don't have easy access to the kind of institutional-grade, risk-adjusted analysis that BlockMind's AI aims to provide.
So if you compare them to the big names people already use, CoinGecko, CoinMarketCap, maybe the tracker and the Crypto.com app,
Yeah.
what's the core functional difference BlockMind is offering?
Those existing trackers are primarily data aggregators, right? They give you basic tracking, price lists, maybe some simple charts. But you, the users, still have to do the heavy lifting of interpreting all that raw data.
Whereas BlockMind,
BlockMind, in stark contrast, is designed to provide personalized, AI-powered actionable insights, complete with sophisticated risk analysis like Sharpe ratios and correlation, delivered directly, easily. That 137% email open rate is basically the ultimate proof point that this distinction moving from just raw data to actionable insight is what users seem to desperately want and value.
and maybe the most significant strategic advantage they have is building on Base. That seems absolutely critical for reaching the mainstream and reducing market risk.
Absolutely critical. Building on Base, Coinbase's Layer 2 isn't an accident. It's a clear strategic move to tap into Coinbase's enormous ecosystem, its regulatory standing, and its huge user base. Coinbase is still the main on-ramp for millions of mainstream crypto users, especially in the US.
And the sources mentioned Base's own growth targets.
Yeah, Base is apparently targeting something like 25 million users and $100 billion in assets on-chain by October 2025. That's a potentially massive growth runway and distribution channel for anyone building there.
So being on Base gives BlockMind almost instant distribution potential, plus maybe a layer of implied trust because of the association with Coinbase, one of the biggest regulated players.
Right. That positioning fundamentally helps mitigate a lot of the market adoption risk. They're
Yeah.
not trying to build an audience entirely from scratch in isolation. They're building on rails that promise potentially huge scale.
But BlockMind isn't just a consumer app using Base. It's also trying to build that institutional data infrastructure with the SDK. That's the more sophisticated, long-term enterprise
Right.
play, right? Securing different revenue streams.
Exactly. All that aggregated retail portfolio data, the sentiment data derived from interactions, the behavioral insights the platform gathers as people use it, that becomes immensely valuable proprietary intelligence once anonymized and aggregated.
And once the SDK's out, this synthesized data layer is something they can sell.
Right. The intelligence you can get from seeing hundreds of thousands of individual real-time portfolio adjustments, that's gold dust for certain players.
Who are the main customers for that kind of proprietary behavioral data?
The sources list a few key groups.
Mm.
First, other analytics platforms that need reliable, aggregated data on what retail investors are actually doing, not just saying. Second, algorithmic trading firms that could incorporate verified retail sentiment shifts into their high-frequency trading models. Third, marketing firms looking for granular insights into retail investor behavior for better targeting. And fourth, institutional fund managers who need visibility into broader retail market trends that might impact their own positions beyond just their internal data.
So that's how BlockMind aims to become critical, revenue-generating infrastructure, not just an app. Let's quickly recap the key growth catalysts driving this potential, based on everything we've covered.
Okay. First, token utility expansion. Basically, every significant new feature they plan to launch, email trading, copy trading, the whole automation suite is designed to create fresh demand for holding or using by MIND.
Makes sense.
Second, base ecosystem growth. The huge distribution and scale promised by building on Coinbase's L2 directly helps their user acquisition potential. Third, institutional adoption. That B2B SDK licensing promises a potentially substantial, stable, recurring revenue stream. Fourth, network effects, especially from copy trading. As top performers attract followers, the platform's value grows exponentially for everyone involved. And finally, DeFi integration. Expanding into things like Avantis leverage trading on non-crypto assets broadens their total addressable market significantly beyond just crypto natives.
It really sounds like BlockMind is trying to capture a convergence of four powerful trends: AI personalization, crypto finally hitting the mainstream, empowering retail investors financially, and building out decentralized data infrastructure.
Yeah.
The strategy is definitely comprehensive.
That sums up the investment thesis pretty well, I think. You've got the team's unique background, those really impressive beta metrics showing product market fit, and critically, this token model that seems designed to funnel revenue back into perpetual BMIND by pressure. It aligns holder interests with platform growth very directly.
Okay, but now, as thorough analysts, we have to flip the coin. We need to look seriously at the risks, because potential this big always comes with significant execution risk.
Absolutely. The vision is grand, no doubt. But the sources are also clear about several risks that need to be front and center. First and foremost is simply the early stage scaling risk. Yes, the beta metrics were stellar, but going from that initial 145K monthly volume to the millions, maybe tens of billions, needed to really sustain that ambitious 2026 roadmap. That's a massive operational and technical jump.
And the competition isn't sleeping, right? Especially as AI tools become more common.
Correct. Token competition is intense. The crypto analytics space is already crowded with tokens claiming to offer insights. BlockMind has to constantly innovate and prove its proprietary AI layer is genuinely superior to keep that high engagement. If the personalization quality slips, users might just drift back to free or simpler tools.
What about the regulatory shadow? Especially with those advanced features planned for 2026 like copy trading and leverage on non-crypto assets, that feels like a major area of concern.
Regulatory risk is very real, yeah, particularly for those advanced features. Copy trading often bumps up against regulations concerning investment advice, depending on how it's implemented. And the Avantis integration for leverage trading on Forex and commodities via synthetic assets, that could definitely face scrutiny as regulators worldwide figure out how to handle decentralized derivatives and automated investment strategies.
So they need to build all this while navigating a legal landscape that's constantly shifting.
Exactly. And finally, just the sheer scope of that 2026 roadmap covering automation, B2B data, mobile apps, synthetic assets, that introduces fundamental technical risk.
It's just the risk of trying to do too much too fast.
That's the execution risk. delivering all those planned features, the app, the full automation suite, the SDK, the Avantis link, the managed pools potentially across multiple blockchains by 2026. That's an immense, complex undertaking. It requires top-tier technical execution, probably rapid team expansion, and flawless coordination. A failure or significant delay in one key area could easily cascade and impact the entire product ecosystem and timeline.
Okay, so after this pretty deep dive into their blueprint, what does this all boil down to for someone listening right now? We've seen the ambition, the early validation, the sophisticated economic engine trying to power it all.
I think it means BlockMind is making a serious attempt to bridge that gap between institutional tools and retail accessibility in DeFi, using AI hyper-personalization as their main weapon. They've shown, pretty convincingly with that 137% open rate, that their initial product tapped into a vein of massive unmet demand.
And the economic model is key.
The design of the revenue model, with its mandated perpetual BMIND buy pressure coming from all the main revenue streams, transaction fees, B2B licenses, subscriptions that fundamentally aligns the token holder's interests with the platform's growth. So if they can navigate those significant execution risks and the regulatory hurdles that come with being this ambitious, the potential to grab a large slice of the retail crypto analytics market while also building valuable B2B data infrastructure looks substantial.
It's a really fascinating mix of advanced tech and smart strategic positioning. It feels like the platform's success really hinges heavily on two big variables. Can they actually deliver that massive, complex 2026 roadmap? And will the base ecosystem continue its projected explosive growth?
Those seem like the core questions.
Right. So how much will Coinbase's established distribution network ultimately reduce that market adoption risk? And what does the success or failure of that deep L2 integration tell us about the broader future of DeFi crossing over into more traditional financial products?
Yeah.
That's maybe the strategic question to really mull over as you think about the long-term prospects here.